Hello and welcome to the Astranti Financial Training Preseen video analysis on the May 2017 Strategic Case Study exam on soft drinks manufacturer Fizz. So before we begin, I'm just going to start by telling you a little bit about myself and a bit about how we are going to approach the Preseen and the things we're going to be looking for. So my name is Peter Steffer. I am the Director of CIMA here at Astranti. I've been with the company since 2013, and during that time I've written and marked many of the mock exams that we provide, and I've also written mocks for other tuition providers. I've also written many of the study texts that you may have used. And if you see in the bottom left hand corner there, my Facebook page, on the run up to the exam I'll be posting all kinds of hints and tips. So now let's take a look at the video series themselves. So for starters, I'm going to go through the Preseen section by section, picking up on all the key points, the things that you should be looking for, the things you should be pulling out of the text and analysing. I'll then be applying them to the case itself, what they mean for the company and what it means for the industry that it operates in. Applying certain business models to it, ones that you may have learnt in your objective test studies, and the likely exam issues. So looking at it and thinking, based on this information, a likely question is X. And also other just hints and tips, general things that will help you gain extra marks in the exam. I'll then go on to my strategic analysis video, which will be taking the Preseen as a whole and summarising it and applying it into lots of different key business models and key business theories before rounding up with my top 10 issues. So these are the most likely things I think are going to come up in the actual exam. So how's it going to work? As I said, I'm going to go through it section by section. I'm going to assume that you haven't read the Preseen. I'm going to assume that this is all new to you and we are going through it together for the first time. And what I'm going to do is I'm going to ask you to make notes yourself. So I'll stop the videos at the start of each one and ask you to make notes on a certain number of pages, and then we'll go back and review it together. And as I've said, at the end we'll go through a full strategic analysis and top 10 issues. So first of all, some key things that you should be aware of. Now the Preseen is the context of the exam. It's the context of the company that is being examined. The background information, as it were. So once you've read the Preseen, this should all be forming a foundation in your mind. And when you go into the actual exam, all the unseen questions that come up in the actual exam, you should be answering them based on this base context from the Preseen. But it's worth noting that you shouldn't write anything based on the Preseen. And that's because you're not necessarily going to be tested on something that's in the Preseen. You'll be tested on the unseen material that you are given in the exam. If that unseen material is nothing to do with the material in the Preseen, then you shouldn't be using the Preseen material to answer the question. You must always use the unseen material. Having said that, you should always be thinking about the Preseen material. Now, you're given this in advance for a reason. You're supposed to learn it and you're supposed to gain as much understanding as you can about the company so that you can use this information in the actual exam. So let's take a look at the Preseen. Now, the first page here only has a small amount of information on it. It's very much an introductory page, and a lot of students will skip over this page and they'll jump straight off to the financial statements, to the risk register, and all the more tangible items within the Preseen. But actually, there is a wealth of information on this page. And if the Preseen is the context in which the unseen is built upon, then the Preseen itself is built upon the context of this introductory page. So let's take a look at some of the information here. So, first of all, we are a senior manager in Fizz and we report directly to the board. Now, this is different from the character, from the person that you play in the operational case study or the the management case study, sorry. And this gives you an idea of the kinds of things that you will be expected to do, and also the kinds of information you will be expected to provide in the answer. Now, in the operational case study, even the management case study, it will be far more along the lines of providing specific pieces of information so that the senior managers, so that the boards, etc., can come up with a decision. But this time round, you are a senior manager reporting directly to the board. Therefore, you need to think about your audience. Think about the people you are addressing. It's not a case of just giving the information. You now have to come to a real recommendation, a real opinion about the information you are providing. So, we know that we need to come up with firm recommendations. And on top of those recommendations, you also need to provide a thorough justification and also mention some points of how the board can take this forward. The strategic case study is as much about your decision-making skills as it is about your knowledge of the CIMA syllabus. And it's also worth noting that if you are given some information, if you are given an opinion by a board member that suggests that we go with one action, and during your judgment, during your analysis, you think that it's actually better to go down a different route, you are expected to put that forward. Don't just think, well, the board members want to go with it, so we need to try and make it work, try and justify why the board members are right. You have to be firm and say, no, I do not think this is the right thing for this company at this time because of reasons X, Y, Z. And that's all about your decision-making skills. That's how you get those leadership marks in the exam, which are worth 25%. And in your role as this senior manager reporting to the board, you also advise them on special projects and strategic matters. So special projects could be ad hoc things arising outside of the normal way in which the business works, the normal day-to-day operations of the business, and therefore project management skills are important. You'll remember your project management from E2. It's worth noting that despite E2 obviously being in the management part of the syllabus, that CIMA believes everything in the CIMA syllabus up to this point is considered examinable because it's considered assumed knowledge. And also strategic matters. Now, this is more exclusive to the strategic level than in operational and management, and this comprises your more strategy models. So things like Ansof's matrix, making sure you consider the impact and the wants and the needs of all different stakeholders. So you're talking about your Mendelow's matrix there. So that's you as the senior manager, as the role you're going to play. Now let's look at some information about the company. So we know that the company is a large company, meaning it will have a fair amount of prestige. It may have a fair amount of revenue and finances available for new projects. Also, when we think about the 5 forces analysis, we know that we are a big company, we are a large company, a powerful company, and therefore may have a reasonable amount of weight to throw when in negotiations with our suppliers and our buyers. And we are a manufacturer of soft drinks. So again, referring back to our 5 forces, what do we think about the buyers and suppliers? Who buys our soft drinks, and where do we get our raw materials from? And the power of those. If we sell to major supermarkets, then they're going to have a significant amount of buyer power. If we get all our different raw materials from one major supplier, then they're going to have a lot of supplier power. If we just buy odd bits from many, many different suppliers, then we are going to have power over them, and therefore the supplier power will be lower. Now, obviously, at the moment, we do not know this, but going back to my point about this introductory page being the context in which the rest of the Preseen information is based on, you should now be thinking about that as you go through the Preseen. We know that the size and the strength of our suppliers or buyers could now have an impact on our operations, and that will affect how we treat them, how we negotiate with them. If, for example, all our suppliers of raw materials came from one big supplier who also sold to all the other different soft drink manufacturers, their supplier power will be very, very high, and therefore we cannot gamble when it comes to our relationship with them, because if they were to say, fine, if you're not going to pay that price, if you're going to be like that, we're going to stop supplying to you, that could have a huge impact on the organization. Now we can see that Fizz is based in Northland and is quoted on the Northland Stock Exchange. Now, when you see that a company is quoted on the stock exchange, you need to be thinking about how it raises additional financing. Now, it's generally considered a strength to be listed on a stock exchange because it illustrates that the company is of a certain size, it illustrates that the company is of a certain prestige. It's also a way in which they can raise additional financing, additional equity financing through things like rights issues or issuing more stock, etc. It also means that we have shareholders. And shareholders, of course, are very important to a public company. They are, in a sense, the owners of that company, and therefore we need to make sure we appease them and that we put them on our stakeholder matrix as people who are important to the organization. Now, of course, there are downsides to being a listed company. The fact that we are listed means that we have to comply with additional rules, with additional regulations, and it also means that we run the risk of being bought out by a competitor. If they were to do a hostile takeover with our various different shareholders, give them a good price, then we run the risk of losing the company or losing control of the organization. And on the subject of rules and regulations, we can see that the nation of Northland uses the International Financial Reporting Standards. And therefore, at the moment at least, we can assume that Fizz themselves comply with the International Financial Reporting Standards. And the good thing about this is it means that it's easier for the organization to export goods to other countries that use the International Financial Reporting Standards, because we already meet the relevant requirements of any country that uses these standards. And we can also see that Northland uses the N dollar. That's their currency. Now, whenever you see currencies, you should be thinking again about exports, about imports, the strength of the N dollar compared to other currencies around the world. Obviously, if the N dollar is very weak compared to, say, the US dollar or pound sterling, then in a sense, Northland-based companies will have less competition from overseas companies because it will be very expensive for Northland-based retailers to buy in goods from other countries. However, it may also make exports easier for Northland-based manufacturers because, of course, the value of the N dollar is weaker, so companies, retailers in Britain, in Europe, in the United States may be able to buy goods from Northland for a lot cheaper. And also, when you see dollars, you need to think about economics as well. You need to think about issues with exchange rates and how changes and fluctuations in exchange rates can cause you to win or lose on certain purchases, and how you can, in a sense, avoid them as part of a risk management strategy. So you have things such as leading or lagging payments or matching invoices in different currencies, and all the other ways in which you can hedge against losing out in exchange rates. And also, whenever nations are involved, you have to think about the political side of things. So, for example, soft drinks, particularly things like Coke and other fizzy drinks, there's a lot of press at the moment about how they are bad for your health, how they are bad for your teeth. And so the government in certain nations are bringing in new laws to restrict the amount of sugar in these drinks, to to apply additional tax on them to make them more expensive for consumers to purchase, and therefore they may not purchase as many of them. We also need to think about the way in which countries interact with each other, and that can have an effect on international trade. In the UK at the moment, we obviously have this huge issue about the country leaving the European Union, and a lot of governments within the individual member states of the European Union, also the European Union as a whole, are all talking about trade with Britain and how trade may increase, how it may decrease, how it will be affected by Britain leaving the European Union. And so even though the governments themselves are not in control of these companies, they are nations, they are companies within the individual nations acting autonomously from the governments. The governments themselves can have an impact, because if, say, Britain were to have a trade tariff imposed on them, that will suddenly make it harder for British companies to export to Europe. That would suddenly make it harder for European companies to export into Britain, etc. So if there were an issue with Nordland, whether it fell out with another country, and therefore there was a ban put on trading with that country, and that happened to be a market that Fizz sold into, that could have a huge impact on our export business. So as you can see, in only 5 lines, we've managed to pull out a lot of important information that's going to help us in our analysis of the Preseen going forward, and also in our exam. So that's the first page out of the way. Let's take a look now at the soft drinks market. Now, the first sentence here: any drink that does not contain alcohol is classed as a soft drink. It's not just things like orange juice or Coca-Cola, it's anything that does not contain alcohol. So it's a huge market. If you think of all the drinks that fall in the gap between tap water and alcoholic drinks, that is an enormous market. And so there's a lot of opportunity here. And when we think about the industry, we think about the industry life cycle here, we know that it's not one that is likely to disappear anytime soon. Now, individual products within that soft drink industry may come and go, but is there ever going to be a time when people do not want soft drinks? And this is particularly relevant in today's world. When you look at the developing world, a lot of countries in the developing world do not really drink alcohol as much as the West, but at the same time they are growing in biopower, they are drinking more and more soft drinks. So the market for soft drinks around the world is growing. And also in countries that have historically had a high level of alcohol consumption, the consumption of alcohol is actually decreasing. In the UK, the percentage of young adults who consume alcohol is actually decreasing, and more are just drinking soft drinks even when they go on nights out, etc. So the demand for soft drink around the world is also increasing. And we can see just how big the soft drinks market is in Nordland alone in the next sentence here. Retail sales of soft drinks in Nordland amounted to 12.3 billion last year. Now, retail sales, so that means the actual consumer purchasing the drink, and not necessarily are the companies, as in manufacturers, selling the drinks to retailers, to wholesalers, and the various other customers of soft drinks. But of course that is still a very good metric to use, because of course the various customers to soft drink manufacturers, such as supermarkets, such as restaurants, bars, hotels, etc., would not buy that product if there wasn't a demand for it in the consumer base. So how is the soft drinks market comprised? Well, it contains 2 main categories: carbonated soft drinks and still drinks. Still drinks being things like orange juice, and carbonated soft drinks being things like Coca-Cola. Now, carbonated drinks, contain carbon dioxide gas dissolved in them to create the bubbles. Now, what this means is that there may be additional costs involved with the manufacturing of carbonated drinks because they contain CO2 gas and they also have to be pressurized. And also, CO2 gas can have a negative impact on your teeth. So along with sugar, there is the argument that carbonated drinks have an additional negative effect on your teeth, therefore your health, which in the current social climate could have a negative impact on sales. And so in the future we could see that the demand for carbonated soft drinks at least starts to decline because of these impacts on health. Now there's some information here about what makes a carbonated drink or about the different types of carbonated drinks. So we have things like cola, fruit flavoured drinks and sparkling water. Now in addition to that, we have drinks that contain caffeine. And this is to make them more refreshing, but some of them have a very high concentration of said caffeine and other stimulants, and so can be classed as energy drinks. Now, this again ties back to the whole idea of how healthy these sort of drinks are for you, and perhaps how ethical it is to market drinks in this way. If you're saying something is an energy drink and you're implying that it's good for people to stimulate them, get up and go, but actually all you're doing is just giving them a huge dose of sugar, a dose of sugar that is well beyond what a health professional would recommend for something as simple as a can of drink. And also the fact that some companies have been accused of trying to sell these energy drinks to children who perhaps shouldn't be drinking high amounts of caffeine and high amounts of sugar. Now in the UK, a few years ago, it used to be that you had to be 16 or over to purchase an energy drink, to purchase something like Relentless or Red Bull. But that's fallen by the wayside now. But there is the potential that some sort of law and regulation like that could be brought into force again, particularly if more medical evidence suggests that children drinking these drinks is bad for their health. And some carbonated drinks are sold as mixers and generally mixed with alcohol. So again, coming back to what I was saying earlier about how alcoholic drinks don't sell as well in some countries as they sell in others, and how there is more of a social trend recently towards younger people not becoming alcohol consumers, that will be tied directly with the sale of mixers. Because obviously if people aren't buying alcohol, they're not drinking alcohol, they're not going to be buying mixers to mix with their spirits. We would also think that the kinds of drinks that are sold as mixers are likely to be sold to hotels and bars and restaurants just as much as to the regular public, because a lot of the times people consume alcoholic drinks, they are in one of those areas. They're in a hotel, they're in a restaurant, they're in a bar, on site. And now still drinks include things like fruit juice, juice-flavoured drinks, still waters, dairy-based drinks, flavoured milk, and squashes. Squash is generally sold as concentrates, diluted with water before drinking. So things like Ribena and Vimto. And you would expect these sorts of products to be sold primarily in supermarkets. It's a very common drink for young children to buy, or not young children to buy, but young children to consume. It's also worth noting that the still water, or bottled water in general, industry is one of the particular soft drink products that is increasing in sales quite rapidly at the moment. If you go to the supermarkets, you'll notice there's a huge range of different bottled waters, when 20-30 years ago it wasn't really a thing. But because people are becoming more and more health conscious these days, they're starting to drink bottled water rather than soda drinks, particularly with the new Volvic and Evian ranges with flavoured still water. And so bottled water really is a growth market at the moment. Now the next paragraph is all about how we can label our products, what rules and regulations exist in the food and drink industry to allow us to label our products. And the big difference in this case is between the words flavour and flavoured. Now if a drink is with, the word flavour is used, such as orange flavour, it means that it tastes like orange even if there's no actual orange in it, whereas if it has been referred to as orange flavoured, then actual orange is being used. Now this could be a very important distinction to make, particularly if consumers are aware of the differences. It's therefore likely to put a premium or a more premium price on an orange flavoured drink than an orange flavour drink. It's also very important that we adhere to these rules and regulations, because a lot of consumer watchdogs will come down quite heavily on the company if it breaches these laws, and that may result in action that either costs the company directly in terms of fines or indirectly through poor image. So that's the type of drinks that exists in the soft drinks market. Now let's look at the distribution channels. So, as we can see here, manufacturers have two main distribution channels for their products. Now, whenever you see something like this, you should be thinking about channel profitability. Is it more profitable to sell down one distribution channel or the other? And if so, if there is room for extra demand down one channel, perhaps you should be pushing more resources towards that channel, because after all, it's more profitable. You're getting more profit, more revenue compared to costs by selling the same product down that route as the other. And so what are these two main distribution channels? We can see the first one here is off-trade, and that involves selling in bulk generally to major retailers and wholesalers. So this will be your major supermarkets. In the UK it would be Sainsbury's and Tesco's, and to wholesalers who perhaps supply the smaller, more regional supermarkets or the independent shops. Now the final consumers of these drinks at these premises will be consuming them off the premises, hence the name off trade. So this would be going into a supermarket, going into a corner shop, a newsagent's, and purchasing a can of Coke, taking that can of Coke out of the shop and either drinking it while you're walking around or taking it home and consuming it there. Now off-trade products are packaged as either cans or bottles. So now that we know that they can be put in two different containers, we have to think about the profitability of each container. Does it cost us more to produce a can than it does to produce a bottle? But then we also have to think about the environment and which ones are perhaps more recyclable. Now cans sometimes are comprised of a lot of aluminium and therefore can be recycled more easily than bottles, which can perhaps be composed entirely of plastic, which of course is non-biodegradable. And they come in serving sizes of 250ml, 330ml, 500ml, litre, 2 litre and 3 litre. So now that we have all these various different sizes and all these various different drinks such as Coke, water, etc., we now can see that there is a lot of different individual SKU lines. So when we know about this, we can think about direct product profitability. How many 250ml cans do we sell compared to 3 litre bottles? What's the profitability on a 3 litre bottle compared with a 250ml can? If there are certain lines that simply do not sell very well, perhaps we could look at divesting those particular lines and making more of the ones that do sell. And as with many industries, the major retailers often have their own brand lines. So if you go into Sainsbury's or Tesco's, you can see Tesco brand cola, you can see Sainsbury's brand cola, etc. So these obviously provide competition, but they also provide opportunity because, of course, Sainsbury's and Tesco's do not actually make their own cola. They purchase that cola from a particular manufacturer and then just simply brand it as Tesco or Sainsbury's brand cola. So there's an opportunity here for Fizz to perhaps provide a retailer with their own brand product. And we can see that it is a significant portion of the market. 23%, so nearly a quarter of the off-trade market is by own brand products. Now onto on-trade sales, which comprises sales to cafes, restaurants, bars and other outlets, where consumers are expected to consume the drinks on the premises. So basically anywhere where you go, buy a drink, sit down and drink it there and then is considered an on-trade premises or an on-trade sale. And just like with the off-trade sale, the major customers will purchase directly from the manufacturer, so will purchase directly from Fizz. And there are also wholesalers who sell to smaller outlets, so your individual pubs, your individual bars who are not part of major chains. And unlike off-trade sales, which take the form primarily of cans or bottles, we also have a third method here of syrup that is pumped through a dispenser alongside carbonated water, much as the picture illustrates there. I'm sure anyone who's been to a bar or a cafe or a hotel, restaurant is familiar with that sort of device. So now that we have our two main distribution channels, we need to think about the individual customers within those channels. So are there major supermarkets, major retailers that purchase from Fizz? Are there major chains of bars or hotels that purchase from Fizz? If so, we need to think about the biopower of these individual companies. Will they be able to get a good deal out of Fizz, or will we be able to get a good deal out of them? We also have to think about competition. How many individual manufacturers of soft drinks are there in Nordland and also around the world that import into Nordland, which can all have an effect on the price that we can get, the price that we can sell our products for. You also need to think about the prices we charge different customers. Now, if you look at on-trade sales in restaurants and bars, you'll notice that the retailer charges a far higher price for the product to the consumer than a supermarket does, than an off-trade company would. If you go into a bar or a restaurant in the UK and ask for half a pint of Coke, you might pay up to £4 or £5 for that Coke. Whereas if you go into a supermarket, you can buy a can of a similar size for 70 pence. Now, are we still selling to these different customers at the same price, thus the retailer getting a far smaller profit margin than the bar or the restaurant? Or can we use the fact that the retailer, that the restaurateur sells it at such a higher price to charge them a higher price for the syrup, for the cans, for the bottles? So we've looked at the various types of products in the soft drink market. We've looked at the different types of outlets that sell these drinks as well, but we still don't really have any idea about the levels of sales of each individual product, of the different types of product and where they are sold. So now let's take a look at the charts in the Preseen, which help to address this issue and help us to identify which drinks are more popular and where they are primarily served. So the first page of graphs contains the carbonated soft drink and sales both on trade and off-trade. Now, again, it's worth noting that these are retail sales value, and so do not represent the volume of cans and bottles sold. As I was saying earlier, that sales on trade might have a slightly higher value because of the fact that you are consuming it on the premises. You are paying more for a glass of Coke in a restaurant than you would for a can of Coke in a supermarket. It's also worth noting that these are not sales that can be necessarily attributed or compared to the sales that Fizz makes, because these are retail sales. So this is the value that consumers pay in supermarkets, in restaurants, in bars. So the first pie chart shows us carbonated soft drinks on trade. So this is the sale of drinks containing carbon dioxide to the trade, so to restaurants and bars, etc. And we can see that by far the two main ones are cola, which comprises 39%, and energy drinks, which comprises 22%. Now, one of the reasons why energy drinks to trade may be so high is because these days energy drinks are often used as mixers. Items like Jaeger bombs, etc., and vodka Red Bulls, which are very popular at the moment and allow bars and nightclubs to charge quite a high price for, because they can use cheaper vodka for them because of the strength of the taste of the energy drink, the flavour of the energy drink. Therefore it masks the bad taste of the low-end vodka. However, you do have this issue at the moment in the press, and in certain countries it's already banned, where you cannot mix an energy drink with an alcoholic drink. And the reason for that is because alcohol is a suppressant in the way that it slows down your heart, it slows down your blood flow, whereas an energy drink is a stimulant and increases that. So you're mixing a stimulant with a suppressant, and that of course has a really bad effect on your body. And the fact that energy drinks are very popular at the moment with regard to use as a mixer could explain why mixers in on-trade are quite low at the moment at only 4%, whereas you would think that particularly in on-trade sales, mixers would be quite high. Other key points here being the fairly strong sales of fruit-flavoured carbonates. So this would be items such as Fanta and Fizzy Vimto and other fruit-flavoured fizzy drinks. And also sparkling water, up here at 14% sales, which ties in with what I was saying about the growth in sparkling and still bottled water. So now down to carbonated drinks off trade. So this is in the supermarket, and no surprises for seeing that cola makes up such a significant portion. Over half of CSD soft drinks sold off trade are cola drinks. But what is perhaps surprising is the level of mixers being sold off trade, when you would think that it would be the kind of drink that would sell better on trade. Now this could be due to changes in the social makeup of Nordland. These days it's more common for younger people who do go out and drink and do go out on nights out to undertake what they call pre-drinks, where they drink before they go out to the bar or the nightclub. And the reason for that is because it's so much cheaper than buying the drinks there and there at the bar or the nightclub. We can also see very high lemonade sales in off-trade compared to on-trade. And this is perhaps because lemonade is not the kind of drink that people want to have when they're going out, but it is a refreshing drink to have just during the day when they're at home, or to take a can into work, etc. So now we're on to still drinks. And this is the on-trade, so people purchasing them in bars and restaurants. And so we can see that the two big ones here are pure juice. So this would be things like orange juice, as in orange flavoured drink, perhaps going back to those brandings that we saw on the other page rather than orange flavoured drinks, whereas juice drinks would fall under orange flavour. And what is surprising as well here is the amount of bottled water, still bottled water, that is sold on trade. 19% of still on trade sales are bottled water. This is being surprising given that restaurants and bars, etc., need to give you tap water for free. You can have tap water for free if you go up to the bar and ask. So why, if that is possible, are people paying so much for bottled water? Is it a social thing that people consider bottled water to be better? They think it tastes better. They think it tastes different to tap water. It has more vitamins in it than tap water, perhaps. Or it could be that in Nordland, like some countries, you cannot actually use the tap water for drinking. It's only for washing and bathing, etc. And for still off-trade, only really 4 products that sell: pure juice, juice drinks, squashes and water. Now we would expect squashes to be far higher in off-trade because it's the kind of things that parents purchase for their younger children. The proportions of pure juice and juice flavoured drinks are very high as well. But the fact that there's only 11% in water of still off-trade leads me to believe that perhaps this idea that whether Nordland tap water is safe to drink or not is incorrect, because if everyone had to buy bottled water to drink, then you would expect water and off-trade sales to be far higher. But these tables don't really mean anything until we look at the figures, which we are given on the next page. So we can see here that off-trade sales are split 49% to carbonated and 51% still by value. But on-trade is far higher. 72% of on-trade sales are carbonated, whilst only 28% is still. So that shows us that the trend towards carbonated drinks is far stronger in on-trade than it is off-trade. Now, when it comes to the figures, we can see here, we've repeated this figure, that retail sales of soft drink in Nordland totaled 12.3 billion. Now, 8.2 billion of that was off-trade and 4.1 billion was on-trade. So 2/3 of the market is off-trade and 1/3 is on-trade. But as I'd already suggested, we can see here that volume sales for on-trade is only about 10%, despite being 33% of the value. And that's of course because on-trade is sold at a far higher cost, or far higher price. So now that we have these figures, this 8.2 billion for off-trade and this 4.1 billion for on-trade, we can work out the values of the 4 different markets that have been identified on the previous 2 graphs. So, for example, we have 8.2 billion for off-trade retail sales. And we know that off-trade sales are split 49% for carbonated drinks and 51% for still drinks. So we can multiply this 8.2 billion figure by these percentages to get our figures for our total market figures for carbonated drinks off-trade and still drinks off-trade, which gives us 4.018 billion for carbonated soft drinks in off-trade and 4.182 billion for still drinks in off-trade. And we can also do the same thing for on-trade sales by timesing this 4.1 billion figure by 72% and 28%, giving us 2.952 billion for carbonated and 1.148 billion for still drinks. And now that we have these specific values, we can go back and work out the value of each segment. So we'll go back to the top to look at the value of carbonated drinks on trade, which we know to be worth 2.952 billion. And so now what we have to do is take these various percentages and multiply them by that 2.952 billion figure. So for example, 39%, Coke is worth 1.151 billion. And energy drinks are worth 649 million. And we do this for all the various segments. So we see fruit flavoured carbonates, 354 million, water, 413,300,000, lemonade, 148 million, and so on. And then we go down to CSD off trade and do the same thing. Now we know it's worth 4.018 billion, which means that cola sales in off trade is worth 2.13 billion Norton dollars in itself. Energy drinks are worth 401,800,000. Fruit flavoured carbonates are worth 201 million Norton dollars, and so on. Now what we can now do is that we have the value of sales in CSD off trade and CSD on trade is work out what percentage of the total Norton market these particular drinks are. And we do that by adding sales together. So for example, the 1.151 billion from cola on trade and the 2.13 billion from cola off trade, and then dividing them by 12.3 billion. Which gives us 27%. So cola is worth 27, over a quarter of the entire Norton soft drinks market. So therefore, we can see that cola is incredibly important to any soft drink manufacturer. And if we do the same thing for all the different types of carbonated drinks, we can see that energy drink comprises 8.6%, lemonade 7.41%, fruit carbonates 4.48%, mixers 4.23%, water 3.36%, and others 1.94%. Now the purpose of this is to give you some kind of perspective on how popular one drink is over another, and this also, as we go forward through the Preseen, will allow us to understand the markets. And we're looking at the various different types of drinks, the various different types of soft drinks that Fizz produce. We can get an idea of the market size for that particular brand of drink, or that particular type of drink. Now, we can easily do the same thing now for still drinks using the exact same method. We know that the still on trade value is worth 1.148 billion and the still off trade sales are worth 4.182 billion. So we can work out the same percentages. And as we did for carbonated drinks, we can now use these figures to work out the percentage of the market, the total market each particular one makes up. So pure juice represents 15.23% of the soft drink market, squash 10.83%, juice drink 9.9%, still water 5.5%, dairy 1.03%, and other still drinks 0.84%. And now we can combine these figures with the figures from the carbonated page to give us a total ranking or a total hierarchy in order of the market. So in descending order, we can see that cola is by far the most valuable drink in the soft drinks market in Norton, followed by pure juice, squash, and juice drink, the three main non-carbonated drinks. Then there's a lot of carbonated drinks: energy, lemonade, back to still for water, then fruit carbonated mixers, and fizzy water. And bringing up the rear, the others and dairy. Now the point of this being that if we're going through and there is a suggestion that maybe Fizz go into producing a range of dairy drinks, we can look at the market for dairy drinks and think, is it really a good market to get into? If there are very few players in it, then perhaps, but if it's already saturated, we can look at these details and think, well, it's only 1% of the soft drinks market. Is there really the target audience there? And that's about as much as we can read from those figures at the moment. The only figure we haven't looked at yet is to work out the total for carbonated and the total for still. And we can do that quite easily by adding these figures for carbonated together and these figures for still together, giving us 6.97 billion for carbonated and 5.33 for still. So I hope you've enjoyed this sample video and more importantly found it useful. Before I go, I'd like to quickly tell you about a few of the products that we do here at Astranti Financial Training, specifically for our case study courses. We have a study text which details all the key theories in which you will be expected to use in your case study exam, as well as details of how to approach the pre-scene and the case study. We also have a series of course videos detailing how to answer case study questions. This is actually an area in which many students struggle. Most of the scripts that I've seen, the failing scripts that I've seen, has actually been due to poor case study technique rather than lack of knowledge. We also have a series of pre-scene analysis videos based on the current up-to-date pre-scene, detailing all the key bits of information and likely issues you may face in the exam. Next up is the industry analysis, a pack detailing information about the industry that the pre-scene company resides in, information about the key players within that industry, and more background information on the industry in general. We also have a range of mock exams created for each level and based on the current pre-scene, which is a great way to get some practice in before you sit the real thing. We also offer marking and feedback on those mock exams so you can see where you are going wrong and where you can improve. Finally, we have the master classes. These are 2 one-day classes taken by our expert tutors to give you all the hints and tips you need to really add to your chances of passing the exam. Also, if you take our full course, we offer a pass guarantee, which, provided you have met all the requirements of the pass guarantee, you will get a free resit on the next exam should you fail to pass. So once again, thank you for your time. If you're interested in any of these products, please visit the website www.astranti.com for more information. Thank you.